The 30th of August, 1982. Well, you know it now. But here's Jordan. All right. Hey, Jordan, afternoon. How you doing? All right. All right, good to have you. I know log on, so you miss anything. That stuff when you came in from last week. Let me just take my before I start, right? All right, folks, we start in the start, right? So I'm not seeing Aisha or Alexis. Aliana is here, and this is in class. Ayaz is online. Jaziri is here. Jordan is online. Cassie online. Kelsey here. Not seeing Leon, Logan, Mandeep, Marcus, Matthias, Noah, Nyla here. Paige, Shakoya, Moon, Shamor, Talia, Teresa, Valentino. Right, and there was one more. Oh, let me see who's that now. Right? Oh, Jalen, right? Oh, oh, yes, Sequoia Moon. All right. Hey, Jalen. Afternoon, how you doing? Hey, Sequoia Moon, good afternoon. How are you? Good to have you on. Yeah, I cool. Just a little extra late today. Traffic was a little heavier today, so when I went for my son, I took even longer than I usually take. Anyhow. All right. So, here's Liam. Right, cool. All right. Hey, Paris. Afternoon. Thanks for joining. Hey, Liam. Good afternoon. How you going, man? Good to have you on. All right, and then Jaden just popped in. Right, okay. So no Aisha, no Alexis, no Janaya. Judith watches the replays, as does Olivia. Hey, Kieran. Right, Shiraz also watches the replays. Yuri is a little late usually, but that's all right. Okay. Right, folks, last week we started doing a bit of a review of the balance sheet. Prior to that, we did a review of the income statement. All right, we started from scratch, which is what I like to do, right? So we got some notes because, of course, it's... One sec. I expect my wife to pass the collection. Just give me 1 second. See that? Oh, Domino's. All right, yeah, guys, sorry about that. Right, so we said to start learning about something, you need to know what it is and why we use it, right? So, you know how we started, right? Why do people start a business? To make a what? To make a profit, right? Now, profit, as we know, is a simple calculation. What's that very simple calculation if you think of CSEC maths? Selling price minus cost price. So then that scaled up to revenue earned minus the expenses incurred in earning that revenue. But the statement that would show the revenue earned and the expenses so incurred in the generation of that revenue is the income statement. Did already, right? But to earn the revenue, we need what? We need resources, right? We can't just start up and say, I'm going to sell something. Okay, what are you selling? Doubles. All right, cool. Where your doubles stand? I don't have one. Okay, you had doubles? No. Okay, so how you plan to set doubles with no double stand and no doubles? I don't know. Okay, not a good plan, right? So in order to be able to deliver, hey, good afternoon, how you going? In order to be able to deliver your good or your service, you need resources. You need things that you will use to provide your good or your service. For example, in the class here, for you all to be able to sit down and write, you need chairs and you need tables. And of course, I need to be able to show my stuff on for you all to see. So I could have put whiteboards or whatever the case is. But of course, we are a bit more advanced than that. So we have screens and we have laptops, we have mics, we have printers, we have all kind of resources, right? What is the collective term beginning with A that we use to refer to these resources? Assets. Good. So the assets. Now the assets come free? Do they just fall to the sky? No, right? Not usually, right? So in other words, we have to pay for the assets somehow. Whose money do we usually use first to buy these assets? The owner. And what do we call what the owner puts in? Capital, right? So the capital the owner invests is used to buy assets. And if you have any money left over, we put it in a bank account or we hold it cash in hand. But yeah, question. Repeat, please. Capital's equity or owner's equity? They both mean the same thing, but owner's equity is more specific. You see, capital in the sense of business does not just mean what the owner puts in. That's what they tell you to narrow the scope early on in PoA. If you were to go in the business world and talk about capital, what that person, if it's a seasoned person, what they hear is they hear money needed. But the money needed can come from different places. The owner and entities other than the owner, which we call creditors, right? So the money coming from the owner is normally called equity capital, or as you said, owner's equity, which is kind of redundant because you see, equity means ownership. So it's like talking about owner's ownership. You understand? So, but if they want to call it owner's equity, cool, I've seen that. Cool, no problem. You want to use that phrase? No problem, do your thing. Hey, Jesse, afternoon, you're going. Long time no see. Sorry, when I'm a past student, so on. Right, and then the liabilities would be called debt capital, DEBT, right? Because that's money you had to pay back, all right? So the money to pay for the assets has to come from one or two places. The first port of call is the owner, right? The owner has to have, as we say, some skin in the game, some kind of money invested because they have to have some incentive to make back your money. Most people don't have money to throw away. I don't know about you, but I don't. Although I feel like I do that sometimes when I go to the grocery, but different story, right? Sorry, what? Anyhow, and then of course, if the owner realizes, hey, I don't have enough personal savings to put into the business, so what do I need to do? I need to borrow. And when the owner goes to borrow, they'll borrow from the bank or friends or family or whatever the case is. And anybody from whom money is borrowed, any entity is classified or called a creditor, right? Back in the day, the word creditor was applied in a very narrow sense to be only trade creditors, people from whom you bought goods or stock on credit, right? But the term creditor, the general term is a lender, all right? Or anybody who provides finance in some way, shape, or form other than the owner, right? So the money coming in, the assets, the resources of the business had to be financed by some way, somehow, right? So that's where we got this this definition from. The value of your assets must be equal to the value of capital and liabilities. And yes, capital can be called different things. It can be called equity. It could be called owner's equity. It could be called capital invested. Liabilities could also be called debt or debt capital, all right, or borrowings, right? So in this particular very basic example, right, ABC started business by investing $10,000, and this was used to buy $8,000 worth of equipment, and the remaining money was kept in a bank account, right? Now what we're seeing here is a nice little table. Now, again, a couple of things. One, there is no one right format for a balance sheet. Your syllabus is specific about you all knowing how to do the working capital format. That is the least intuitive format for a balance sheet because it doesn't go against the concept of what a balance sheet is, but it doesn't show it outright, right? It has this nice little thing because working capital is important to know. Okay, great, fine. But then why don't publish financial statements like companies show working capital if it's so important, right? Anyhow, different story, right? So there's no one right format, right? Once you understand the concept of what a balance sheet is, you can prepare one based on the information, right? Even there's something called an IAS. It's an International Accounting Standard, right? There's another set called International Financial Reporting Standards. And these things are basically like accounting law, but they vary from region to region. And that IAS 1, which has to do with the preparation of financial statements, even says this standard does not prescribe a format or a layout. It prescribes or mandates a minimum amount of information that must be displayed. The choice of layout or display is up to the entity which is presenting the statement, right? Now, of course, your teachers don't, if there are 30-something kids in their class, your teachers won't have to correct 30-something different looking things. I could empathize with that, right? But again, sometimes just give all of this kind of lie So everybody kind of stays in line, but different story, right? Not judging them in any way, shape, or form. But at the same time, you all need to know there's no one right way to present a balance sheet, right? So here we could see a breakdown of the assets, right? The resources of the business. We have equipment and we have some money left over. Total value of assets is 10,000. And that had to be financed. The money for those resources had to come from somewhere. Where did it come from? Well, look at that. The money put in by the owner was exactly equal to 10,000, which exactly equals the value of assets. So your first and primary understanding of a balance sheet is that it's supposed to show the resources of a business, the assets, and how these assets were financed, right? And it's very possible to have only assets and capital. Liabilities is not mandatory, but is usually there, right? It is usually there, all right? Now, when we go on to our next example, we defined assets and liabilities. Sorry, one sec. I didn't know it went all the way down there, right? So we talked about assets being any resource that the entity owns and or controls and uses in the process of generating revenue and earning profit, right? So for example, like me, I utilize these screens, my equipment, the computer, the furniture to seat you all, right? Internet connection, all that kind of stuff to help me generate my revenue, right? And there's also a little addendum to the definition of assets in that it is also any benefit that can reasonably be expected to be received in the foreseeable future. Right, this little addendum specifically covers receivables, so money that somebody owes to the business, because that money, so if, like for example, when I deliver my service here, most of your parents pay at the end of the month, right, which is what we agreed. But when I deliver my service, I earn my revenue. So up until the time that I am paid, it's a liability on all your balance sheet, right? On my balance sheet, it's an asset, but there's nothing that I own, right? There's nothing physical that I own. All I have is a promise from your parents to pay me in the future, which is acceptable and accepted, right? So that's what this particular part of the definition of an asset covers. Oh, hello, wife. Good to see you too. Don't forget the water. Thanks very much. Right. Right. And then liabilities. So liabilities refer to any present obligation, right? What is an obligation? Something that you have to do. So it's a financial obligation, right? So any obligation, any present obligation that the entity has to transfer resources or benefits to a third party in the future arising out of a past transaction. So just like in the definition of assets, we have these three different dimensions of time: a present obligation or present expectation of some benefit being transferred in the future arising out of a past transaction. All right, so by now we should know the different examples of liabilities. All right, now in this particular one here, we did something a little different. We had the owner investing 60,000 and also borrowing 40. All right. And we had these particular items here: equipment, vehicles, inventory, and the remaining money. So I think that was the part that kept some all in the last question. Remember? Because I didn't tell you how much money was left. I just tell you the remaining money was kept in the bank account. And some of you all finished the balance sheet and it wasn't balancing. Like, but Chris, you sure it right? Like, yeah, it right. And that was the part that they catch you with. Well, I catch you with. Right. So we have a layout of the assets: equipment, vehicles, inventory, bank. Total value 100,000. And when you scroll on, because you want to know, hey, these are the resources you have. Okay, where did the money come from to pay for them? Oh, sorry, that was the second thing I wanted to talk about, right? So again, don't forget, under all of the fancy definitions and financial statements and debits and credits, what does the word account mean? It means to explain. And what are we doing in financial accounting? We're explaining where the money come from and where it's gone, right? So the money came from owners and creditors, and this is where it went. Right? So at the heart of accounting is explaining, and explaining specifically about money, right? Every T account you have is explaining about that specific item, the increases, the decreases, right? And how much is left at any particular point in time. That's the balance, right? The income statement is explaining what? Where the money you earn come from, and then what was done with it. You spend it on what, right? So these financial statements can become complicated, but at heart, there's a very simple concept governing each one of them. Things are supposed to start simple and then get a bit complicated, right? But sometimes with you all, sorry, let me listen to Aisha. Hey, good afternoon, Aisha. How are you doing? Good to have you on. All right. Yeah, don't worry. We're just recapping some stuff from last week Wednesday, so we didn't start anything just yet. All right. So just to get your brain in gear. So I ran a bit late today, but I will start the newer stuff now. Yo. Yeah, go through. Right. So sorry. Yeah. So here, once again, this is where the money came from, and this is what was done with it, okay? Right, and then we had a notes part 3. We talked about current versus non-current, right? So all assets are not created equal. Some assets are used up on a regular basis. For example, those entities that buy and resell goods. Hold on one second. Oh, here's Yuri. Right. Hey, good afternoon, Yuri. How are you going? Good to have you on. All right, we're still recapping the stuff from last week, so you didn't miss anything new. All right, yeah. Okay, man, good afternoon. All right, so I think that's everybody. All right, Shiraz do come. Olivia do come. All right. Ooh, I have to upload something. All right, Judith do come. Janaya do come. We see Alexis very infrequently, so I guess she watches the replays. Anyhow, right. Yeah, so current and non-current, right? So as I was saying, not all assets are created equally. Some assets are used up on a regular basis. Like, for example, like me, when I buy my stock of paper and I print out question papers or past papers or solutions for you, right? It gets used up regularly and it's changed. It's not the same paper over and over. I mean, recycling apart, right? But every day you come, it's the same laptop, the same screen, the same desk. So some assets last longer than others. Agreed? Right. So we have to have a bit of a distinction between them, right? So the current assets are those that are expected to be used up or converted into cash within 1 year or less, right? And we have the usual examples there: inventory or stock, right? Receivables, short-term investments, prepaid expenses, accrued revenue, cash at bank, and cash in hand. Of course, there are one or two extra ones that kind of turn up from time to time, so you have to be aware of that and where it goes, right? Current liabilities are those that are expected to be repaid within 1 year or less. All right. Now, non-current assets are those that we expect to last for longer than 1 year, right? Like equipment, furniture, fittings, fixtures, machinery, land and buildings, motor vehicles, even in Trinidad roads, a whole different story. All right. Then we have non-current liabilities. So those are loans or monies that are borrowed and we agree to pay them back over periods exceeding 1 year. Usually like 5 to 10 years. In the case of like a mortgage, you might get 25 to 50 years, right? And again, who's be around in 50 years to pay back something? Well, that's where a limited liability company's ability to, or the characteristic where it can outlive its owners, right, comes into play. But again, different story. Right, so when we did this now, we started to kind of split apart the assets into different classifications, right? So there are two kind of sequences in which you're supposed to know how to present your balance sheet. Like I said, there's no one right way. The sequence you're seeing here is in the order of permanence. What does permanent mean? It means long lasting, all right? So we start with the longest lasting assets and we kind of go down to the not so longest lasting assets, right? So equipment and vehicles. So of course, some teachers will say, well, vehicles more poor than equipment. Or like, you ever drive on Trinidad roads? I don't think so, right? But anyhow, some vehicles last real long. For example, like we have a couple of cars outside. One was bought in 1999, which makes it about 25 years old. And the other one was in 2006, which means it's approaching 19 years old, right? So if it's well taken care of, things can last a long time. Trinidad roads notwithstanding, right? Now, equipment too. Equipment could last for a very long time. For example, I still have my first laptop I bought in 2010 across there. If it's working, it's a different story, but I still have it, right? But of course, if it's not working, it's of no use, right? So some equipment can last very long, or the equipment doesn't last as long. So it's not a hard and fast rule, right? So they may have given you a particular order in which you have to list it. That order is not set, not hard and fast. It's not. There's no law that says it has to be that way, right? The slight exceptions we make from time to time is with land and buildings. Usually land and buildings or property we put first, right? And cash in hand is always the most liquid asset, right? Cash at hand, cash in bank, what we call cash equivalents, all right? Now, the other order in which you have to know how to prepare your balance sheet and which they ask for once is either the Jan 2017 or Jan 2018 exam. They've never asked for it since then, and I don't think they've asked for it before. I could be wrong on the before one, but I haven't seen it before. Right, that one was the order of liquidity. Now, we recently did ratios, and we saw that liquidity refers to what? Well, in the context of a ratio, it refers to how able an entity is to repay its current liabilities with its current assets. Can you pay back your short-term debts with your short-term resources, right? Liquidity also, and primarily, means the ease of conversion of an asset into cash, or how easy it is to convert an asset into cash. Right? For example, and of course, cash, therefore, and cash at bank are the two most liquid assets, right? And especially with the advent of online banking, sometimes cash at bank could be even more liquid than cash in hand. For example, there's this group on well, I know most of you probably don't use Facebook, but there's this group on Facebook called the Porter Spain Give and Takery, where people give away things for free. Sometimes they'll charge a little something, right? Yeah, man, what's going on? Yeah. So, but sometimes the things are, well, far from here, right? Well, again, far is relative. Sometimes I'd go right to maybe Victoria Gardens, Westmoreland, maybe Cascade or something. Other times we had to go Cunupia. Couple things were in San Fernando, so we didn't bother to go, right? But let me say, for example, you had to pay for something, right? If you had cash, you would literally have to pick up yourself and go to San Fernando. But if you have online banking, do you have to go anywhere? Well, if you have Wi-Fi at wherever you are, no, you don't. You could log on and transfer the money, and money has been transferred. So in that sense, in certain cases like that, cash at bank is more liquid. It used to be thought of as less liquid because before that, you would have to go to the bank, which of course is one extra layer of friction between you and your money, right? According to how far the bank is, right? So even though like my bank for the company is right there in Starlight, sometimes depending on traffic, it could be a headache to get there, all right? Anyhow, again, that's relative. So we have classifications such as non-current and current, right? Now, you're seeing here a two-column format, right? Now, I did say before, there's no one right way to present this information, right? I like a two-column format when you have multiple items here, right? So you can list out your items and put a subtotal off to the right, right? To me, the rightmost column is supposed to be reserved only for subtotals and grand totals, right? Anything else that requires working, shift one space to the left, right? So we even have up to a three-column balance sheet, which we probably will see on Wednesday when we come to talk about depreciation, that kind of stuff, right? Now, there's also a one-column format, which I will show you just again to give you a different option. I'm not saying you have to use it. I'm saying you have to like it. I'm just saying it's something you might want to consider. But again, you don't have to. The funny part is I showed it to my Form 4 class last July, August, and they liked that better than the two-column and three-column one. So like, okay, cool. Right? Anyhow, but I think when they went to school, the teachers wanted them to use the two-column format. So I said, all right, no problem. Anyhow, so from there now, we have total assets, right? So of course, where did the money to pay for these assets come from? Because that's the question the balance sheet is supposed to answer. What are the resources or assets you have? What's the value? And how did you pay for those things? Where did the money come from? How much came from the owner and how much came from entities other than the owner, right? So you have your capital invested by the owner here, 60, right? Now, normally, if there's only one item in a section, I might tell you, well, don't bother to put this, just put it in the right column. But again, just for the sake of consistency into the presentation, I would say you could do this. You don't have to, you could, right? So you put your 60, bring it across. Now, for the non-current, right? So this is the part some of you will have in trouble with, which is perfectly normal. I didn't encounter this splits up here until, let me tell you when, eh? So not when I was in school in Form 4, Form 5. Not when I was in Form 6. Not in UE, which is strange because I did a finance degree and this should have been part of it. Not when I went back to teach for 4.5 years. When I left Fatima and I was working in a small finance company, they had this thing I kept saying called CPLTD. I'm like, what is CPLTD? And the man watched me. He said, you sure your degree is finance, boy? I'm like, yeah, but they never teach me this. So it's just going to show you, sometimes when you go to university, you don't learn everything. I mean, you can't possibly learn everything, but sometimes, and this was so kind of basic. Let me explain why, right? So, CPLTD. We just talked about a distinction between current and non-current items, right? What is the time period we use to distinguish between current and non-current? 12 months or 1 year, right? Fine. So, we have here in the information that the whoever it was that started the business borrowed $40,000 from the bank for 5 years. So if you borrow a loan, if you borrow money and you plan to pay it back over 5 years, that makes that loan non-current, correct? Right. But now, usually when you borrow money, you pay back PCA at least year by year. Sometimes it's month by month, sometimes it's every 3 months, sometimes every 6, but usually it's year by year. Occasionally, you have different structure where for the first 5 years, you don't pay back anything, but that's not it, right? Here, we assume you pay back some piece every year. On top of that, they tell you here in the last line, out of the $40,000 for the 5-year bank loan, $5,000 is due for repayment within the current year. So if you have to pay back $5,000 in the current year, which is in less than 12 months, that means that this portion of $5,000 is what? A current liability. And it means the whole 40 is not non-current. Out of the 40, 5 is current, and the remaining 35 is non-current. Right? So that's what CPLT is. It's the current portion of, well, what they call long-term debt, or what we would call non-current liability. So we could call it NCL, which don't have as nice a ring to it. But oh, hey. How would you do this solution? Good. All right. Can you go sit on today?
No, I have the one line.
Okay, cool.
So just start.
All right. Hey, Renee, thanks for sharing the life. And Chrissy Tobes. And for the follow, right. Okay, right. So yeah, so current portion of non-current liability. So it simply means that, and I have seen this more than once in the 2010s. It hasn't come that often, but it's something with which you need to be familiar and about which you need to know. All right. Now, the only other thing that kind of bothers me about this two-column format is that it doesn't give you scope. Well, actually, look at here. I was able to show total liabilities, but now you have to know that you have to add the 60 for capital to that item down there. Other than that, you actually have to take this out and just add going straight down. 60 plus 35 plus 5, right? But I kind of prefer to have a total liability. So you could see total assets, your capital, and your liabilities here. All right, but again, it's not mandatory, right? It's nice to see, but it's not necessary all the time. Okay, we did one question, right? And then we have to call it today. So today, we will be continuing our exploration with the balance sheet. What we want to look at today is what we call the net asset. Sorry, what? I have no idea what that was. Okay, cool. Yeah, the net asset presentation of the balance sheet, and I'm also hoping to show you the working capital presentation. Right, so I don't want it to be that I'm just explaining stuff and showing stuff on the screen. I want you all to try a couple of things as well. All right, so let me see if I could actually just pull this down a little bit. Pull this across. Oh, yeah, I was able to. Oh, okay, cool. All right. All right, so net asset example. Nope. Okay. So the net asset presentation of the statement, clearly. Position. All right, so what we're going to do is pull this down a little bit. And we're going to zoom in here so you can see a little more clearly. I think that's good. That's looking good to me. I think that's big enough, right? Okay, cool. So, on occasion, okay, sorry, let me give you a little talk through first. I'm not talking plenty, but that's well, the name of the game, right? So, net assets, right? Long story short, net assets is equal to assets minus liabilities, right? And if you remember your balance sheet equation, right? If assets equal to capital plus liabilities, right? What I'm talking about, assets minus liabilities, is a bit of a rearrangement. But let me show you, right? So on occasion, the information given to us only contains assets and liabilities but not capital. And we have to use the given info to find capital. As such, right, this amounts to a rearrangement of the accounting equation as follows. No, that's not what I wanted that at all. Okay. All right. So what was the initial accounting? Hey, Preetam, you could ask him. Yeah, what was the initial accounting equation? assets equal to capital plus liabilities. Thank you very much. Right. So if we are only given assets and liabilities in order to find capital, so like they will tell you in maths, you have to kind of carry across liabilities and subtract it. Right? So it's assets minus liabilities equal to capital. All right. So okay. All right. So a balance sheet prepared using this layout is referred to as this layout of the balance sheet is referred to, right, as the net asset presentation and is useful for solving for capital when it is not given. Right. So let's zoom out a little bit. No. Let's put that in the middle. All right. So what I'm going to do is I'm going to send a picture of that in the chart. All right. So again, you guys can copy down whatever it is that's on the screen as much as you want to copy down. I would always suggest doing so. But of course, I know I probably am typing faster than you're writing, so I don't want to rush you. Okay. All right. So what I'm going to do is I'm going to do another text box. I'm going to put some information in it, and then we're going to do up a balance sheet like that. So. All right, cool. So example, right? So F this now, right? Had the following assets and liabilities as at 31 December 2023. Right? Okay, cool. So let's say machinery was 50,000. Vehicles was 80,000. Right? Inventory was 30,000. And cash at bank was 25,000. Hold on. 18, 130, 160. Okay, 40,000. Right, and for liabilities, so 50 is 130, 160 is 200. Okay, cool. So how much I want? All right. So we have a 10-year bank loan of, right, so say 60,000, of which 10,000 is payable in 3 months' time. Right, and let's say we have accounts payable 20,000. Right, any values here repeated? So 10, 20, 30, 40, 50, 60. So we do have a 70. Okay, cool, right, that's good. Right. So draw up F. Dissner's statement of financial position as at 31 December 2023, showing her capital. Showing her capital at that date. Okay, cool. So let's just recap. Actually, let me just delete some of this stuff down here. Yeah, like a little breathing space between stuff, right? Okay, so let's just recap info, right? So F. Dissner had the following assets and liabilities at the 31st of December 2023, right? So we're saying machinery 50, vehicles 80, inventory 30, cash at bank, hold on, yeah, cash at bank 40. So we have 4 assets. How do we classify machinery and vehicles? Current or non-current? Non-current, they're long-lasting, longer than 1 year. And inventory and cash at bank would both be current assets, right? So, and then the 10-year bank loan. So, of course, if it's a 10-year bank loan, it's classified as non-current, right? But out of that 60,000 that is borrowed, 10,000 is payable in 3 months' time. If we have a liability payable in 3 months' time, is that liability then classified as current or non-current? Current. So out of this 60, 10,000 is current, and the remaining 50 would be non-current. So you see how you have to be mindful of it to split it. So the 60,000 is the total amount borrowed. Yes. It was borrowed for 10 years. Okay, cool. 10 years means it's non-current. But out of that 60,000, we're paying back 10 in 3 months. So out of that 60, 10 of it is current, and the remainder is non-current. All right? And we also have a liability of accounts payable for 20. Now, accounts payable, generally speaking, is classified as what? Current or non-current? Current, right? Okay, so we have 2 current liabilities, 1 non-current. All right. Did they give us the capital explicitly? Yes or no? No, they didn't, right? It's not there. So how do we find capital? Well, again, if we use your accounting equation and do a little rearranging, all we have to do is take total assets and minus total liabilities, and we get capital, right? Now, when we do it in the balance sheet, the first way we get it is it's called net assets, and then below that, we just put it as capital. So I'm going to show you, right? So F. Dissner, right? Balance sheet as at 31st December 2023. Right. Okay. So I'm going to have to split the screen so we could put in the information. Right. Okay. So of course we are going in order of permanence. So we're going to start with the non-current assets first. Right. So which of the items were non-current assets? We had machinery and vehicles. So let's put them, right? So machinery was 50,000. How much was the vehicles? 80,000. Right. So we're gonna add those together, get 130, put across there. Right. Hey, give yourself. Okay, cool. Right. Then after non-current assets, we have current assets. Very good. Right. So we have 2, inventory and cash at bank. Right. So the inventory value is how much? 30,000. Thank you. And then the cash at bank, it was 40,000. Very good. Oops, that's 1 0 too many. Right. So when we add, oh, no. Hey, whoa. Right. What's going on there, boy? What's that now? Right, I'll check it just now. Okay. So now, what are you doing? Right. So when you add 130 and 70, what do we get? 200. So 200,000 is the value of asset. Look at right. Right, so that is total assets. Right, now again, you don't have to put this in capital or bold or highlight it. I'm just doing that so it stands out. Right, okay. So are we okay with the balance sheet thus far? Any questions? Anybody? Anything? No? Google Meet, I didn't forget you. I know I just kind of got carried away, so I do apologize. So Google Meet, if you guys are good with what you have so far, just give me a quick Genie chat, please, and thanks. If you need me to re-explain anything, give me an R. And if you could, of course, be specific about what it is you want me to re-explain, that would help me to help you faster, right? Okay. Just give me 1 sec. I want to see if my wife. Okay, cool. Thanks for responding, almost everybody. All right, so of course now, instead of heading up finance by, right, which is how we initially did the balance sheet, what we're going to do is we're going to start with the liabilities. And because we're in order of permanence, we are going to start with the non-current liabilities. Now, I know most of you all have seen the working capital format, which would have us put current liabilities first. We're not doing that format yet. We'll probably come to it a bit later. For now, we're doing the kind of what I like to call the raw net asset format, right? So, and in proper order of permanence, right? So for the non-current liabilities, we have the 10-year bank loan, right? Now, again, the total amount initially was 60,000, but we have a 10,000 portion payable within the next 3 months. So of course, 60 minus 10, right? Right, it's 50. What? Christine. How are you doing, Chris? Right, cool. And then for the current liabilities, we have what items? We have the accounts payable, and we have the current portion of non-current loan. All right, so that's what I would call it. I know it's a lot to write out, but that's what it is. All right, okay. So the accounts payable figure is the 20,000, and then the current portion is the 10,000. So 20 and 10 will give us 30. Right, so now, sorry, 1 sec. Actually, yeah, I could push that up. I could actually take up the whole split. Right, so now, oh good, well, I'm there, boy. Right. So now when we add these two items, what do we get? We get total liabilities. Oh my God. And guess what we do to find capital? We subtract assets minus liabilities. Sorry, 1 second. That might have been a little too many. So 200 minus the 80 will give us 120,000. Sorry, 1 second, my wife. Hello? I'll come in, thank you. All right, somebody now jumping in there, way? Norton. Are you on FB as well? I am on FB. I am on TikTok. I'm not on FB right now as in live streaming, but on TikTok and YouTube live streaming. Oh, here's Janaya. Hey Janaya, good afternoon. How you doing? Give me 1 sec. I did. Right, so we call this net assets. Right. So net assets is total assets minus total liabilities. And now the question is, if out of this 200,000 of assets, 80,000 was paid for liabilities, it means the remainder was paid for via what? Was the only other source of finance apart from liabilities? Yep. Right. So financed by capital. Right. And all you have to do is literally put the 120, right? So capital invested by, oh no, you can just put capital, 120, 1, 2, 3. You put a total there, and you're good to go. Right? So let me just actually take out the couple extra lines down here. So that's 150. Right, so I'm gonna send a picture in your chat with this real quick. Right. Okay. Right, so as we can see here, let's just zoom back in a little bit more. Right, so what's going on is that we didn't have the capital value, but we did have the assets and the liabilities, and as we know, assets minus liabilities equal to capital. All right, and then if that's what they gave us and we had to find capital, when we come to the finance by section, we just plug in the capital figure, right? You could even put it in one line or whatever the case is. It actually does not matter, as far as I know, right? I don't know of any particular rationale for why it should be in two lines. I just prefer to see it like a total, right? So again, if you want to see it just out of curiosity, right? Right, it could look like that as well. All right, capital invested by owner. All right, so yeah, that's basically it for the net asset format. I will show you the 3-column format. All right, so the 3-column format, what it would simply do is it would pull the major totals one more column to the right. Let me explain. Right, so what would happen is total assets would be pulled across here, total liabilities as well, and the capital figures. Let me just put back in the fills here. Oh, yeah, well, that too, obviously. Right, so this particular way of presenting it makes a little more sense to some people because, like up here, you had to kind of know to take total assets away from total liabilities because it just looked like this last column that was a bit overcrowded, right? You had not just subtotals but kind of grand totals there as well, and final totals, right? Here now, you have your subtotals for each section in this column, and then your grand totals for assets and liabilities, and then net assets, right? So this column to me, right, I would kind of prefer the 3-column approach here, but again, it's not 100% necessary. It's really up to your discretion and your preference, right? And like I said, even if the question paper So you know how they give you guys formats to fill out, right? Even if they give you 2 columns, you can draw in a 3rd column and use it. If they give you 3 columns and you want to use 2, then just use 2. Just know you gotta make stuff fit in the space they give you, right? Or just use one of the blank, when I say, use one of the extra pages if you make mistakes and draw up whatever you want to draw up there. All right? Okay. In class, people, are we okay with the 2 and 3 column formats? Does anybody have any questions, problems, issues they want to discuss, anything? No? All right. Google Meet, if you're good with the 2 and the 3 column format, just kind of give me a quick G in the chat, right? If you need me to explain either or both of them, right? Or the whole net asset concept. If you want to explain that, it's not a problem. Just let me know. Give me an R, and I will organize. All right. Yeah. And I see in. Right. I see in. Right. So yeah. So Jordan, thank you. Yeah. Because I know you had asked me about the balance sheets. So I'm glad you understand. Right. And baby Nana. All right. And Chris Dean. Nice. Look. Good job. Oh, hold on. Is it this? That's it then. What's the other one? This one. Right. Anyhow. Yeah. All right, cool. So with that, what I want to do is I want to give you guys one to try. And I will not have you do it 2 ways. Use whichever format you prefer. If you want the 2 column format, use that. If you want the 3 column format, use that. Whichever one you prefer. I'm not nitpicking. If you want to use a 1 column format, you can use that too. All right. So let me just copy and paste this across here. All right, so RQ. Okay. So I'm just gonna take out I'm going to take out everything from here and here. Right, so I send the pics in the chat already. Right, so we won't need okay. Cool. Hey Ellie, how you doing? I think Ellie moves next. How you doing? All right. Right, so RQ just stands for review questions, right? So, right? Let's say 2022. Okay, so instead of machinery, what do you want? Equipment or fixtures? This is like fixtures now. Let's change that to 80. Let's change this to, what else we have? Furniture. Let's put that at 60. Why not? Right? Let's put in some inventory. Why not? Let's put inventory at 50. 80 and 60 is 140. 140. And let's put 10,000 in the bank. Yeah, okay. I'm okay with that. 80 and 60 and 60. That's 200, right? So let's put a 12-year bank loan of, we didn't have 70 last time, right? So 70,000, of which 20, but we'll have having 250 items. Okay, so let's put a 30. So we have a 40 and a 30, right? And accounts payable is, yeah, okay, I guess we could leave 20. Draw up your matters. Okay, cool. So with that, right? Okay, hold on. I think my head blocking on TikTok there. Okay, cool. Yeah, I think we're good there now. Right. Okay, so yeah, so that's the question you guys have to do. And again, I'll give you about 10 minutes to do it if so long. We could do it in like 5-minute bursts and correct section by section. So I'm sending this in the chat as well. Hypervenom, boy, that's a bad name. I like it, yes. This person had to talk to me real quick. Okay, so while you guys working, I'm just gonna carry something upstairs real quick and come back. I wanna come back. If you have any questions, of course, you can ask it then. Oh, yeah, who? You all need like formats to fill out, I think, or you all? All right, how many people need formats to fill out? 1, 2, 3, 4, 5, 6. Okay, cool. All right, give me 1 sec. I basically have the same thing, so it should be that right. So what I will do is let's expand this. Okay, quick question. You want a 2 column or a 3 column? All right, I'll do the 3 and then you just use 2. Okay, cool, no problem. Six is plenty. Oh, okay, cool. That's fine. Anybody online want a format to fill out? If you want a format to fill out, just give me an F for format, and I'll send it in, right? Not F3, just F. Right? Or if you're good to just write out your own stuff, that's cool too. On one page, right? Okay. All right, let's go back to the question on top of here. Let's zoom back in. Cool, yeah. So I think you're good there, right? Oh yeah, I was supposed to get that. All right, who wants it? Right. Yo. One. Anybody else want one?
Yes.
But like when you actually do it,
Yes.
what happens is if you have a van and you put in the you get the drinks and thing. Because like them can see color. But you just because I would buy it, but they run they're
Serious?
That's a man? That's a man? I want that. No, that's why I'm not gatekeeper. No, I'm gatekeeping him too. Stop. Stop. I'm gatekeeping him too. Stop.
And the fixtures is not right.
Fix, yeah.
Yeah,
Says he said bad, fix, yes, fix it, I'm Oh, no, I said, no, please, you can't do that.
real heads up. I look like we're gonna heads up. We walk.
I'm telling you, I'm very upset. She followed me. Oh, she's so tired. I'm so good.
So what? So much Whatever you
Oh, she's
son, John.
serious?
Oh, when she wanted.
Actually, Kevin next niece. Kevin next niece, yeah, like get
Bro, and Miami, you don't know meal come up. They
Oh,
literally have
that's
no meal
all.
comes to Miami. I realize
She's so sweet.
most of them are not gay, but
I will post it up night before 900.
yeah, bro.
Yeah.
A man is gonna buy it.
Yeah, mushroom. I mean,
That's gonna be Shaman.
Wait, sorry. Try to
You just want to touch them up.
man, tell me I'm told for my ticket.
Sham, look up. Sham. Look at the eyebrows. Look at the eyebrows. I see it way
Yeah,
too
me
much.
and man.
No, I can't do that. You know, so much.
Oh.
She's
I wonder somebody else sent me. Yeah,
Bro, just buy the phone now. Hey, buy the phone now. And then if you get food, just sell the phone. If that you have, then when the time comes, you have to pay 600.
how she price was?
350.
Yeah, man.
Have buy the phone. I know I'm on 3-4 right now.
It's like.
Okay, who's on there? Gali. Yeah, Gali, what's going on? Gali is still there? Sorry, Gali, I stepped away for a little bit.
You never do.
No, I'm playing next year.
No, you never do. Like,
So you subtracted it to differently 70. You know, 40. That's the part of correct. 30 is correct. Very good. And you subtract it correctly. So this will be the mark the same. Right? So just fix this to 30. So if this is the change, I guess that's the change. This is the change. Alright, okay, good. You're doing good. Have we got room? Good.
Oh, that's not mine.
What's that?
I didn't line that.
Fix that one. How are we gonna do it? Good. Alright, cool. Alright guys, I'll give you all a couple minutes again. I should probably see if this have charge. So if it had a charge, I could do that before class start. Yo. Yeah. That's up. Oh, battery says full. Bluetooth. Must have put it applique. Oh, that's well. Okay. Oh, no boy. Oh no. Yep. Yeah, and this here. 30,000 out of the 70 is payable in 3 months' time.
So when you log to, you have to minus 70.
70 minus 30, that's correct, yep. No? Okay. Oh, man. Device address. On. Parent. No, it's not true, no. That's weird. Oh, no, that's it. Select the device as parent. Stays under. Other devices. Nope. Yeah, so that's not right. Cool. Yeah, that's not right. All right, let's clock in here and see what's going on, right? So let me zoom out a little bit. 170. Yeah, man, 150 could do. Okay, maybe 170 was a little better. All right, so we're going to start with the non-current assets. Right, so we have the fixtures, 80 to 3, and then the furniture, 60. Okay. Then we have the current assets. We have inventory, 50,000. Whoops, 10 too many. Then we have cash at bank, 10,000. All right, so total assets is 140 plus 60 is 200,000, right? Okay. Liabilities now. So let's start with the non-current liabilities. So we have a 12-year bank loan, and it was a total of 70,000, but they tell us that 30,000 is repayable within 3 months' time. That's too big a figure, but anyhow. So that's 40,000 remaining. And then we have the current liabilities. Liabilities, yes. Liabilities. Right, so accounts payable, that's 20,000, and then the current portion of non-current loan, 30,000. All right, what's going on? So, cool vibes. I'm assuming that means what's going on. WSG, I'm not sure. Does it sound something else? Have any vids on 5 Life for AFCO? Yeah, check my YouTube channel. I have a tutorial and I have passive solutions. It's there. Everything there. Okay. Sorry, what? Oh, sorry. I was 10 too many. Okay, there you go. Right, so 40 and 50 is 90. Oh, it's supposed to be 90. And that's total liabilities, right? So total liabilities. And then 200 minus 90 will give us 110. Anybody? Nice, thank you. All right, so this is the net assets. Right, and we had to show finance by, so finance by capital, and then we had capital invested by owner is just equal to the same 110, right? So it's just a plug and play. Okay, are we okay with that item there, ladies and gents? All right, I'm going to send a pic in the chat and Google Meet. Just give me a quick G in the chat if you're good with that. If you want to see the 3-column format, just give me a 3, like a number 3 in the chart. How do you get the 110? Right. So what you do is you take the 200,000 and you minus the 90. Right. So net assets. So 200,000 minus the 90,000. So that's total assets minus total liabilities, giving us the 110. Right. Right. So Aisha and Joe, they want the 3. Okay. So we're just going to copy and paste the format down and pull some stuff across. Right, so we're going to shift this across there, shift this across the, oops, and then this will just go there, right? Maybe I could, what did I just do? Oh, I know what I did. Row height is let's see if we could zoom in there a little bit more so we could see it a bit more easily. Right, we could, we're not bound for the heading. I think you all know the heading, right? That's not critical right now. Right, okay, so 200 minus the 90 give us the 110. All right. Yeah, Gali. Yeah. I don't know if you're okay with that, right? Okay. Right. And Aisha and Jordan, just give me a quick G if you guys good with that, right? Please and thanks. Hey Derek, good vibes. It's me. Hey, it's me, D. All right, lovely. Sorry. Right. Okay, guys. So I know we don't have too much time again, but what I want to do is I started late, so I can't, in good conscience, end early. So what I'm going to do is I'm going to show you the net working capital format. And when we come on Wednesday, and I will try to be on time Wednesday as much as I can, traffic permitting, right? We will do practice in that. And then next week, Wednesday, and I intend to have class next week, Wednesday, whether you're here or not, we will start looking at the adjustments and their place in the balance sheet, like the accrued and prepaid expenses, the provision for bad debts, and the provision for depreciation. And of course, we also don't have to discuss, the capital section. Like if you have opening capital, net profit, and drawings, how do we deal with that? Okay, that's my wife going too. All right. Okay, so just give me a minute or two to copy and paste that. Working capital example. Okay, cool. So the net working capital presentation in the finance. Okay, let me just zoom in here real quick. All right, so net working capital is the difference between current assets and current liabilities, right? It is considered an important item in terms of liquidity, and as such is sometimes required to be shown explicitly in the body of the balance sheet. All right, this sort of how I want to phrase this, boy. This sort of upends the order of permanence and order of liquidity But as we know, there's no one right way to prepare a balance sheet, right? The placement of non-current liabilities can vary, right? It can and often does go after the current liabilities, but it can also be put below with the capital to give what is known as the long-term financing version of the balance sheet. Right. It should be noted that this is the least intuitive way to present the balance sheet. Right. Now, the reason I say that is because, again, what does a balance sheet show? It shows the assets of a business and how those assets were financed. What do we mean by that? Where did the money come from to pay for the assets? What are the two sources? Capital and liabilities, right? So to me, it's either you show your assets on top and then your capital and liabilities below. Or if you don't need your capital, you can show your assets minus liabilities on top and your capital below. Why are we breaking up the liabilities? Why are we kind of rearranging? Again, I'm not saying it's a problem. I'm just saying that it doesn't seem very intuitive to me. But these things can be, it's like Lego pieces. You could pull them apart and put them back together anyhow you want, right? Not every single way will be accepted per se, but if done correctly, it should present the same information. Okay, so I'm going to use the same F listeners information, right? So I'm going to zoom out a little bit. Okay, so with this, also the column use kind of gets a little upended. And I don't want to say you have to use a 3-column format, but it becomes a bit easier to do such. So give me a sec. Right. Let me take out this one time. Okay, I'm gonna zoom in here a little bit. Right, so this is what's gonna have to happen, right? So you will not have actually scope to put total assets, nothing like that. This is gonna have to go across here, right? Which then, of course, kind of disrupts the whole consistency in presentation, like I was talking about earlier. All right, this is gonna go on top of here. Actually, right. So this is where we're talking about, right? So you have your non-current assets first, because again, it's order of permanence that didn't change. So non-current assets followed by current assets, and then you have your current liabilities. Oh wait, hold on. I could put it there. Yeah, you do your thing. No see. So now this is where we do current assets minus current liabilities. So what's 70 minus 30? That's 40. So that is going to give us the net working capital, or what some people call just working capital. Oh no. Right. All right, it's tomorrow for AdMat, right? Okay, cool. Right, and then all you really do is you pull across your 50 for your non-working, your what you call it? Your non-current liability, sorry. Sorry, yeah, so you had to add the 130 and the 40. That's gonna give us 170, and then 170. Leave yourself no man. Minus that will give us all right. Cool. Right. So once again, you start off with the non-current assets. You add them up, and you have your current assets and your current liabilities. And when you subtract, it gives us net working capital. Now, some people like to put less current liabilities there, right? There's no obligation to do that. Some people like it, but it's not absolutely necessary, all right? Sorry, one sec, what's this now? Oh, that's where that went. Well, boy, okay. Sorry, I forgot to put a dollar sign there, yeah? Okay. So 50 and 80 is 130, 30 and 40 is 70, 20 and 10 is 30, 70 minus 30 is 40. 130 plus 40 is 170. Now, people ask, do we have a label for this line? Like if it's clearly not total assets, it actually is total assets less current liabilities. Right? But I'd be hard pressed to say that you have to put that. So total assets less current liabilities. Right? Or you can leave it blank, right? And then now you subtract your non-current liability. So 170 minus the 50 is 120. And then this capital is 120. And then go to. Right? So yeah. So that's it, basically. Okay. So I'm going to send this in the chat. Now, Google Meet, just give me a quick G if you guys are good with this particular form. I want to say good if you follow what I do, right? Of course, when you come Wednesday, we're going to practice more of those and maybe start looking at the adjustments on Wednesday, right? If you need me to re-explain, I have a couple of minutes. I can re-explain at least a little bit. If you have any questions, format-wise or whatever the case is, that is not a problem. Right, in class, people, we okay with that particular layout there? Any questions, anybody, anything? All right, cool. All right, so let me just check my Google Meet feedback there and see how we're doing. All right, so a couple people jump out and 1, 2, 3, 4, 5, 6, 7. So that's about 7 out of 11. Okay, a little more than half. All right, so the rest of them. Okay, so guys, we'll put a pin in it there for today. When we come back on Wednesday, again, you'll get one or two like this to try. Right, so I didn't show you the what you call it, the long-term financing. Okay, let me do that real quick. I'll copy and paste that down here. Right, so the long-term financing item, not item, long-term financing version. Basically, what you do is this goes down here, right? So this becomes your total, and you add the 120 and the 50 to get 170. Actually, we put that in a different color. Right. You go and walk where? KFC is not a quick walk, or no? Alright. Alright, Teresa, I'll see you. Hey guys. So yeah, so this is the long-term financing presentation where you have your total assets and current liabilities on top, inclusive of showing net working capital explicitly. And when we say long-term financing, is because capital is more permanent than liabilities. So that's why it's shown before liabilities. All right. Okay. So folks, that's about it for today. I'll see some of y'all back in about half an hour for math. The rest of y'all have a good evening, and I'll see you on Wednesday, hopefully. Bye. Oh. Savannah. Sorry, I didn't see your comment earlier. I don't usually check my YouTube comments during class. Bones Boy, manufacturing. Wow, okay, that was a serious exam then, boy. Yeah, Savannah, I do. I have people in my lessons from all over the place. If you want, you could email me on the back end, chris@adaptuition.com, or you can DM me on any social media platform, preferably Instagram, and I'll get back to you. I have no idea if you're still there, so I do apologize for not seeing your comment earlier. But anyhow, that is how it's go. So comments on TikTok, I have a stream there. Anyhow, so my 5 viewers on YouTube. Oh, Savannah, the same exam tomorrow. Are you all in the same country? Bones boy, where you from? But yeah, but I hope I'm saying the name properly. Is it Savannah or Savannah? It's not an A, so I'm thinking it's Savannah. Right? So Savannah Morgan. DM me on Instagram, Adaptuition, or TikTok, or email me, chris@adaptuition.com. Right? And tell me, yeah, email me, Chris, CHRIS @adaptuition, right? And tell me this is Savannah from the YouTube live. And we could chat about how I can try and help you. All right. It depends on if you're joining the class or if it's like a one-on-one thing. It differs. We could talk about the details there.